Hey, it's Soleil, and this is episode 137 of the Orange Pill Investor. And today I want to talk about what y'all want to talk about, which is some tickers that I asked for folks to post in the comments if they wanted them covered. And I am grateful that folks did paste some tickers. So let's make sure that everybody gets what they want. All right, so Mark H said SQ, which is block, and I think somebody had already said NVDA. Maybe I'll go back to that one. And let me just throw this into here as well. So Tastytrade's pretty cool. So it gives you IV rank. So this is very low. I'm expecting the premium to be not great, but I guess the premise is these guys are buying Bitcoin. So will they get a similar kind of Bitcoin premium or like a volatility premium? He's saying their Bitcoin mining focus is interesting, and they're going to be starting to just load up on Bitcoin. So this is an interesting play here. Let's just see how they've been doing for 3 months. Okay, so trending down over a year. Okay, not bad over the last year. And does not look like they have earnings on the radar. I customized this to have an earnings column because that's any binary event can be important, and earnings are probably the most important binary event, unless you're looking at pharmaceuticals, and for them it would probably be any type of FDA approvals. Okay, so if I owned Block, I would want to see, okay, am I going to run the wheel in Block? If so, I generally just start selling an at-the-money put. And if I was going to do that for next Friday, 1% of this would be about 60 cents. So double, so about 2% call the way at the money. Not great, but not terrible. I'm sorry, that was a call. So about $1. So 1.5% at the money. Does not blow my socks off. But let's see, selling a covered call. Let's try to get, I try to get 20% call away value in MicroStrategy. I try to get at least 10% in the miners. But on regular stocks, I would probably just maybe try to build in like 5%. So 10% of the current share price would be about $7 a share. So half of that, $3.50. So if I'm selling a $70 strike, I can get $24, which is like not even quite 0.5%. So this is definitely not something that I would trade. This is not trading like the miners. Yeah, and I don't know if I'm going through these too fast or I'm just doing back of the napkin math here. This is all just kind of like ballparking. So the way that I do it is, okay, here's the share price, $66 a share. If I want to try to collect 1% of this every week, then that means I need to collect at least $66. I'm just moving the decimal place over a couple. And so I could do that going up to about the $68 strike. But that's only building in about $1.50 in call away value. So what is that? A little like between 2 and 3%. So to collect 1% premium, I can collect about 1.5-ish%. in call-away value. So this is not like amazeballs for me. It doesn't look like they're getting a Bitcoin premium as far as implied volatility is concerned. Let me just grab Mara, for example. If I was going to start the wheel in Mara and I just sell an at-the-money put, this is 4, almost 5% premium here. 1% would be 21 or 0.21, and 5 times that would be 105. So like 4.5% at the money. So way more premium can be generated in Mara, and I would probably say that Square. Let's just try to superimpose this on a year's worth of Bitcoin. Just going to tap back and forth. So Bitcoin was kind of like trading sideways, and then we got some pump, slight dip, and then pump, and then trading sideways again. So it doesn't look like Block is really trading like Bitcoin. So it doesn't seem like it's getting a Bitcoin premium. Maybe a little bit, because right here, Bitcoin shot up from 50 to 70, and Block maybe kind of went from 65 to 75. Maybe a little. But yeah, while Bitcoin was just trading sideways, Block was doing whatever the hell it was doing. Yeah, so I don't really see anything too interesting about Block. If they're going to start getting a Bitcoin premium because they're going to start loading up on more Bitcoin, it kind of hasn't happened yet. And the premium is not like amazing. But if I was just dead set on this, I was like, okay, I'm going to do this no matter what. Since I can't get much premium out here, I guess I would just go to like the 70 and collect $25, but that's just not much. So at that point, maybe I would go out to 45 days, so 40 or 54 days. And then go up to around like 80%, so it's probably a 0.3 delta-ish. And then I could sell this for 140. And instead of selling weeklies like I prefer, I could just collect 140, and then you want to manage this trade and roll it every 2 to 3 weeks. So the ROI that I would expect here, so in weeklies, the ROI is just every last cent of premium, other than the dollar that it cost me to roll it at the end of the week. But if you're going out to 45 days, you're not going to collect this whole 140, and you really don't want to. What you want to happen is to collect half of this in about 3 weeks, and then you're going to roll it out to 45 days again. So in that case, I'd be collecting $70 for 3 weeks, which would be about 27? No. 3 times 20, 60, 23. So that's about $23 a week, which is like 1/3% a week. So not really, really only collecting about a 1% every 3 weeks. So I just wouldn't do it. But if somebody, I guess if for some reason I just had to hold this, then I would go out to 45 days, and this has got about, 10% call is about 7. So yeah, so it's got about 10% call away value out to 45 days and collecting about 2% every couple of weeks, 2-3 weeks. So don't love it, but if things If things were to change, you know, maybe. All right, let's see what's next. All right, Hurt said, going to start dabbling in NVIDIA after the 10 for 1. So I guess this is going to go down to about $100 a share. That will be easier to trade, that's for damn sure. So let's look at NVIDIA the way it is now. And maybe I'll just comment quickly. So I don't do this trade. I've done it a couple of times. What's the name of that book? Trend Following, maybe. Anyway, there's a couple of books I need to read. But some of the traders that I used to hang with on Clubhouse, they were momentum traders. And so what they would do is they would keep a list of the 52-week, you know, companies that are surpassing their 52-week highs, like NVIDIA. And so NVIDIA was at 950 with its high. And then, of course, what happens when it gets over, you know, has a good earnings call. And so what they would do is that if something is breaching its 52-week and it gains some momentum, they would just start YOLOing into like buying short expiration calls. And I mean, I think some of them were making some good money, but it was a little too scary for me. So the way that I trade, obviously, is just selling calls, covered calls and everything. So if I was going to own 100 shares of this and sell covered calls for next week, or actually we can start at the wheel. So 1% of this would be $10, 10.50-ish. So this is 1.5%, 1.8% at the money. Not amazing. Going up here and collecting 1%, I can get the 1090 strike, which is about $20 in call away. So that's like 2%. 2% call away and 1% premium here. I generally try to add those up, and that's kind of like my potential profit is the call away, and my guaranteed profit is the is the ROI for the week. And so adding that 1% and this 2% is like 3% potential, max potential. So don't love this either. And I'm going to say something about NVIDIA, and maybe I'll do an entire episode on it. But I have not verified this yet. But what I heard was that, maybe I can just check the frickin' news. Who makes NVIDIA chips? So what I heard was like 80% of NVIDIA's chips are from Taiwan. Taiwan. Okay. So a year ago, I don't know how relevant this is, NVIDIA CEO feels safe relying on Taiwan for chips. Feels perfectly relying so much on chips. See here. What I heard was 80% of NVIDIA's chips were made in Taiwan. Let's see if there's a percent sign in here. Here, revenue, okay. So whether that is true or not, to me, NVIDIA is a huge risk. China's doing like war games over there, and from what else I heard is that they basically came right out and said, yes, we are practicing invading Taiwan. They didn't say they were going to invade Taiwan. They just said the scenario that they were practicing was invading Taiwan. And so I know some folks are like, okay, they want to hold NVIDIA forever. The only things that I want to hold in forever is Bitcoin. That's why I named the channel Orange Pill Investor. But and I was going to do a poll and include NVIDIA because it's all the rage right now. But they make the chips. Like the AI, the revolution is AI. And so yeah, they're going to make the chips for the revolution, but the companies that are doing the amazing things are going to be the companies using the chips. And so one of the major customers for NVIDIA is Tesla. And Tesla happens to be my other asset besides Bitcoin and MicroStrategy that I actually am serious about and that I would probably consider holding for the next 10, 20 years. But NVIDIA to me is just not worth it. They're the clear winner right now, but Michael Saylor said that you invest in an asset when it is disrupting and the clear winner. Both of those must be true. And NVIDIA is the clear winner right now, but they still have competition, and anybody that comes up with something better than them or the same and cheaper, they're going to be able to potentially dethrone NVIDIA. And the fact that they could just be in lose 80% of their production on a Taiwan invasion. I haven't. Once I confirm all of that stuff, maybe I'll do a whole video on it. But it just doesn't seem like it's worth the risk. Certainly not for me. I mean, I can barely get much premium and call away value on covered calls, and then to have serious existential risk in the company because all of their chips are made in Taiwan, and China would love to just invade. And if they're going to do it, they might as well do it before the election, because once whoever wins gets in, they'll be in their second term, and they can basically just do whatever they want. Not saying that they would defend Taiwan, but a second-term president that doesn't have to worry about re-election could do whatever they wanted. Right now, if China invaded Taiwan, Biden might actually have to be diplomatic about the situation because he can't do anything stupid and, risk jettisoning his re-election hopes. So don't love NVIDIA. I guess this could change when they get the 10-to-1 split. Like, the last time they split, I think I bought, was it a 5-to-1? Anyway, I bought like 20 shares of NVIDIA as soon as they announced the split, and then when it split, I had 100 shares. And I don't even think I bothered to sell covered calls against it. By then, for some reason, stock splits, they just pump. And so if they end up splitting, I think once I got my shares split and that the stock had pumped like 10%, I just sold it all and got rid of it. I don't know if I sold any covered calls. Let's check. Let's check my history. Okay. Oh, I had iron condors. So this isn't something that I talk about a lot because I really stopped doing it. But you can see here I sold 20 shares back when it was 192. This was after the split. Sold 10, sold 10, sold 15. Oh, I had bought 25. So then, what is this? 15, 25, 35, 45. Did it only split? I don't know. I don't remember what the split was last time exactly. But I used to run all the iron condors for earnings plays, and I will do something more in depth about that as well. I stopped doing it because it was a little too much time intensive. But it is it's an option selling play just around earnings. You sell the iron condor the day before earnings and you close it the day after, because of what I'll go over on CHWY next time. So it's called earnings crush. So implied volatility is building and building towards earnings, boom, crushed. Building towards earnings, crushed. And so this is the option seller's play here, is you sell options here, you buy them back cheaper here. Sell expensive, buy cheap. sell expensive, buy cheap. But yeah, NVIDIA is a nope for me. No for covered calls, and no for existential risk in general. All right, so Jerry asked for Mara. I cover Mara regularly, and I will continue to do that since I actually like trading it. But I will do an entire video maybe comparing all of the miners and just kind of rank them in order of which ones give the most premium and call away value, which ones are the most liquid, which ones have the best bid-ask spread, something like that. So I'll do a side-by-side comparison of all the miners, but that will take way more time than I have in this video, so I'll make that an entire video. So I'll be looking for that, Jerry. I will not forget about you. All right, so Ben says CHWY. Let's check out CHWY. And this is the one that he said has earnings. He was paying attention. Earnings is always an important thing to be watching out for. So the 29th before the close, before the open, and IB rank is about 72, and I got this pulled up in Market Chameleon, and so this would be an excellent earnings play. Back if I was trading earnings still, I would look at this and I'd be like, okay, cool. This is exactly what I want to see. I want to see implied volatility building and then collapsing, building and collapsing. But let's just check. We'll do both. We're going to compare to see, okay, is this something that I would trade just in general? And then we'll do the earnings play. But keep in mind, the premium that I can get right now is going to plummet next week. So if you're looking at this, okay, so 1% of 16 would be 0.16. So this is excellent premium right now. 5 times that would be, yeah, about 80. So yeah, you can get 5% at the money. That's legit. I got 5% in Mara. But if implied volatility collapses, you might only be able to get half of this next week. So if you're like, okay, I'm going to buy 100 shares of CHWY and I'm just going to sell covered calls for the next 3 months, as soon as earnings happens on the 29th, this premium, implied volatility was 90 before earnings, 60 after. So implied volatility dropped by 30 points. This delicious premium may go bye-bye, unfortunately. But let's try to collect 10% callaway value, so that'd be a little like $1.50 on top of the price. So 17, 18 bucks. You can get 3-ish, almost 4% premium here with 10% callaway. That is excellent. And if this amount of premium continues after earnings, I would trade this. If I was, I mean, I basically only trade Bitcoin, MicroStrategy, the miners, and Tesla at this point. But back when I would trade anything and everything that delivered premium, I would totally trade this. But let's look at an earnings play. So basically, so what did we say earnings was? The 28th or 29th? Okay, 29th, before the market opens. So to do an earnings play, you would actually have to set up, you'd have to sell puts or covered calls the night before. And I wouldn't want to bother buying 100 shares of something that I would have to turn around and just sell. So the day before earnings on the 28th, back when I was doing this strategy, and I'm going to check my history because I used to trade CHWY as well, probably iron condors. But if I wasn't doing iron condors, I would probably go down here to around 80% likelihood of profit, and I would just sell this put. Now, the profit is not going to be like amazing or anything, because the goal, again, like when I was saying you go out to 45 days and you want to collect half, the goal here would be to try to collect half of this in one day. So on the 28th, before the market closes at like 3:30 Eastern, you're selling this for 30 bucks. And then in the morning, you're hoping earnings crush happens, implied volatility collapses. Let's see, implied volatility on this is like 150 on this option. So you're hoping that implied volatility drops to like 75 or something, and then you sold it for 30, you want to buy it back for like 15 tomorrow. And so you're going to pocket $15 on approximately $15 stock. So you're going to collect 1% in exactly one day. So whereas I try to collect 1% a week, your goal, you'd pat yourself on the back if you can put up $1,600.50 of collateral for one day and collect 1% of that. I mean, if you did that every day, it doesn't sound like much. Well, let's just bust out the calculator. There's how many? 250. Actually, I don't need the fucking calculator for this. What are there? 250 trading days, something like that. So if you got 1% every single frickin' day, that would be 250% profit for the year. That's pretty legit. Yeah. So this is what I would do if I was still doing earnings plays. I would just come down here, and you could even go, you can be safer if you want. But again, if you don't mind owning these shares, if you're like, you know what, CHWY is something that I'm totally cool with owning, and you sell this put, and then you're just going to let yourself get assigned those 100 shares on the end of the week, that's fine too, because you're knocking your cost basis down by 30 bucks. So instead of plus if CHWY crashes to 12 or something, you're going to pick up the shares at a 10% discount at $14.50. Now, granted, it sucks because it's only worth 12, but you'd get this other little 30-cent discount as well. So you'd actually pick up the shares for $14.30 or $14.20 if it goes below your strike. And then you could just, okay, now your cost basis is $14.20, and you could sell covered calls against it. So will be interesting to see if this premium holds up after earnings, but this is excellent premium, and back when I was trading tons and tons of tickers, this would definitely be on my radar. So the first yes of the day. All right, Hood. Oh, I forgot to check my history. Hood is something that I definitely traded a ton. And actually, I remember when Hood went public. So this went from 35 to 55. And I can't remember if they halted trade. I think they halted trading. And I'm pretty sure, let's check my history. I'm pretty sure I just YOLO'd some whack-ass call, like 1 week call. Bought a 65 call. Yeah, and then just sold it like right away. I bought this at 9:30 in the morning, and then I sold it 10 minutes later and basically doubled up. But this was dumb. I mean, and then I started selling puts against it. So, oh, wait, what? No, I bought a, what the hell? Okay, so I guess I shorted it. I bought a 55 put, and then I bought a 70 call, and then I was playing both sides of this, and then I sold a 62. Who knows what the fuck I was doing back then. But anyway, this scalp, I'm still pretty proud of this scalp right here. I basically doubled up my money in 10 minutes. That was kind of cool. It was dumb, but it was still fun. But yeah, I think they halted trading, and then that just put a damper in the whole business. But all right, so Robinhood, you know, maybe they're a let's see, when is Robinhood's earnings? Okay, so they must have had earnings fairly recently because it's not on my radar for earnings. Ivy rank is about 60, so anything over 50 means that it's higher than its, you know, its average. 50 is going to be about average, so 60 is a little above average. So this could be good. This could be something decent here. So if I wanted to start the wheel, I was going to sell a put. Getting 1% would be 20, so this is 3.5%, not too shabby. And if I own shares and I wanted to try to get 1%, I could go up here, so 22.5 to 23-ish. 10% call away would be $2 a share. So yeah, this is tradable. This is pretty close to my miners. 10% call away gets me to 22.50, and I can pick up 1%. Yeah, this is definitely tradable. This is on par with most of the miners that I trade. So this is not bad. I would either just buy 100 shares of this at 20.68 and then sell this covered call here and lower my cost basis to 20.44, and then maybe buy another share of it every week, or, you know, whatever. But if I was going to sell, if I was going to start the wheel, I usually just start selling at the money because I almost kind of like want to get assigned the shares. So, but if you were gonna do the mirror image of the covered call, instead of building in 10% call away value, you would build in like 10% discount. So I would go $2 down. It's not going to let me go that far. But to collect 1% premium would be right here at the 19.50. So that's like $1.10 of a discount. So you can build in like, okay, if the price goes below 19.50, I get $1 off the price, right? This would be very similar to just saying, okay, I'm going to put a limit purchase in, and if the price goes down to 19.50, then I buy these shares. But this is better than a limit purchase because if the price does go down to the price that you want, you're going to get them at the price you want, and you're going to have been paid this $27. So I don't really understand why you would put in a limit purchase when you could just sell puts at that. That doesn't make any sense to me. Because what if you say, okay, I want to buy 100 shares at 19.50, and HOOD never goes below 19.50 again? What if it just goes up to 30, goes down to 25, goes up to 50, goes down to 40, and it just, you're going to lock up $2,000 worth of collateral, and the transaction never happens. So I don't understand limit buy. Did I say limit sells earlier? I don't understand limit buys. Somebody says, okay, I'm going to put a limit order in, and I'm going to buy these shares at 19.50, good for 90 days, or good till close, or whatever. Doesn't make any damn sense. Sell a put. What I would do is sell a put at the price that I want and just get paid. Pay me $20 this week. Doesn't go to 19.50, pay me $20 again the next week. Pay me 20 the next week, and the next week, and the next week. Okay, finally, a month from now, it goes to 19.50. Okay, I got paid $100 to get the price at 19.50 like I wanted the whole time. Or if it never goes to 19.50, at least I'm making $25 a week. I'm making 1% ROI every week, and I never even get the shares. I just sell puts on it forever. So HOOD is tradable. So 2 no's, 2 yeses. And I think that was the last one. Yep, Hood was the last one. I'll come back and do an entire episode for you, Jerry, and we'll get that knocked out. So again, thanks for watching. Thanks for reading the posts. And thanks for responding and giving me some really cool shit to talk about. This is what, you know, I guess I'm technically work optional right now. I make, I think I took in, the account's worth about $400,000, and I picked up $5,000 in premium last week, so about 1.25% ROI for the week. And I definitely do not make $5,000 a week at my full-time job. So if they lay my ass off, or I can't take it and quit, I will not starve. I would be able to just pretty much keep on trucking, and it's making it more and more difficult to deal with bullshit and not just be like, F it, I'm out of here. But it's a decent salary, so as long as I can continue to do that salary, then I can just live off of that money, and I can just reinvest 100% of my premiums that I collect every week. And if I quit this damn job, I would have to live off of that money. So I wouldn't be able to just reinvest $5,000 a week. It would be, okay, let me peel off, you know, some for the car note and the house note and all the other notes. But this is fun for me too. So not only would quitting my job and doing this for a living be more financially beneficial, I just like it. I'm a big gamer my whole life. I think I had the first video game I had was it was called Intellivision. I don't know if any other millennials, oh, Jesus Christ, millennials, I don't know if any other Gen X folks remember that. The millennials certainly do not. But it had this whack-ass controller. It was kind of like a freaking cell phone, the front of a old cell phone, and it had a little disc on it that you'd move up, down, left, and right by pressing on this round disc in the direction you wanted to go. It's crazy shit. But I've been a huge gamer my whole life, and this just feels like playing a video game to me. So trading in the stock market is fun. Talking about it is fun. And so I appreciate you guys participating and giving me the opportunity to talk about stuff that I like to talk about. And so hope you got something out of it, and keep the suggestions coming. Maybe I'll just do like a weekly poll with whatever hot stocks are in there, and then I'll leave an option there for like other, and people can suggest whatever the heck they want to suggest. All right, cool. Appreciate you guys, and hope this helps. All right, leave your questions if there's something I didn't cover that you were hoping I would talk about. Drop that in the comments. All right, be good, y'all.